Hey everyone, welcome back to Corporate Decoder, the place where we unpack the hidden stories in company reports. Today we're diving deep into XWELL Incorporated's latest proxy statement for their 2025 annual meeting, and folks, they've got quite a dance card planned for shareholders. XWELL Incorporated is asking its shareholders to vote on a whole bunch of important things, from electing new directors to approving a reverse stock split and even a significant share issuance. But what do these proposals really mean for the company and for you as an investor? Let's buckle up and find out. First off, XWELL is holding its annual meeting virtually, which is pretty common these days. The meeting is set for the 18th of December 2025, and it is all about getting shareholder approval for some pretty big moves. The first big item is electing some folks to the board of directors. This is standard yearly business, making sure the company is in good hands. Next up, they're asking shareholders to okay their choice of accounting firm. CB's CPA's PC is on the hot seat for approval, which is pretty routine but still important for keeping the books clean. Then we get to the say on pay proposal. This is where shareholders get to give their 2 cents on how the company is paying its top executives. It is an advisory vote, meaning the board doesn't have to follow it, but they do listen. Following that, they want to know how often you'd like to have that say on pay vote. Annually, every 2 years, or every 3 years. It is your chance to tell them your preference. The board is recommending every 3 years, suggesting they believe longer periods give them space to implement long-term strategies. Now, things get a bit more interesting. They're proposing to classify the board. Think of it like dividing the directors into 2 groups, with one group up for re-election each year for 2-year terms. The idea behind this is often to provide stability and make it harder for hostile takeovers. The board argues this helps maintain long-term policies and reduces vulnerability to abusive tactics. However, it also means it could take longer for shareholders to make significant changes to the board if they disagree with its direction. This is a big one. XWELL is asking for approval to do a reverse stock split. Why? Well, they mention needing to maintain compliance with Nasdaq's minimum bid price requirement. That is the rule saying their stock needs to trade at $1 or more. They had some trouble with this in the past, so they want the power to combine old shares into new ones. Potentially at a ratio of 1-for-2 to 1-for-20. The idea is to boost the stock price. But be warned, this can sometimes make shares less liquid and might not permanently fix underlying issues. They're also giving the board the power to decide if and when to do this split, and at what exact ratio within that range. They point out that if they don't get approval, they could face delisting from Nasdaq, which would be bad news for stock liquidity and raising money. This one sounds complicated, but it is essentially about approving the issuance of a large number of shares, potentially more than 19.99% of their outstanding stock. This is tied to a securities exchange agreement where they're swapping preferred stock and convertible notes for new senior secured convertible notes. The catch is, these new notes in the existing Series G preferred stock can convert into common stock, and with some adjusted prices, this could lead to a lot more shares hitting the market. This proposal is crucial for them to comply with Nasdaq listing rules. The company explains they might issue shares instead of cash for certain payments to preserve cash. But this could dilute existing shareholders significantly. They also mention that existing major shareholders like Iroquois Capital Investment Group and Iroquois Master Fund might acquire voting control if this and other conversion opportunities are fully realized. This is like a safety net. It allows the board to adjourn the meeting if there aren't enough votes to pass certain proposals, giving them more time to win over shareholders. It is a way to ensure they can get their agenda through. Now, a quick look at the people involved. We've got some familiar names. Ezra T. Ernst is the president and CEO, and he is also nominated for the board. The board has 5 members in total, with a mix of folks bringing experience in finance, brand strategy, and consumer goods manufacturing. They also highlight that most of their directors are considered independent, which is good for corporate oversight. Looking at compensation, the summary compensation table shows the pay for top executives for 2024. Scott R. Milford, the former CEO, got a salary and some stock options. Suzanne A. Scrabis, the former CFO, also received salary, a bonus, and stock options. Ezra T. Ernst, the current CEO, received a solid salary and stock options as well. The numbers here are the reported values, and they provide a snapshot of executive pay. The Outstanding Equity Awards table gives us a peek at the stock options and restricted stock that executives hold. For example, Ezra T. Ernst has options with exercise prices ranging from $1.51 to $32.8, and quite a few of them are due to vest over the next few years. This shows how much of their own money is tied up in the company's future stock price. Director compensation is also laid out, showing cash fees and equity awards. The chairman of the board gets a decent package, and other directors receive fees based on their roles and committee memberships. This pay versus performance section tries to connect what executives are paid to how the company performs. For XWELL, it looks like there is a stretch to show a clear, positive link between executive compensation and shareholder returns, or net income, especially for 2023 when compensation paid to some executives was quite high while net income was negative. The shareholder ownership table is crucial. It shows who owns the most shares. We see Iroquois Capital Investment Group and Iroquois Master Fund as major holders, along with XWELL Invi LLC and CPC Pain and Wellness SPV. LLC notably, these investors hold significant amounts of Series G preferred stock and warrants. Bruce T. Bernstein, the chairman, also holds a notable percentage of common stock. Okay, let's put on our Warren Buffett hat for a moment. XWELL Incorporated is in a tricky spot. They're aggressively trying to stay listed on NASDAQ, which is why they're pushing for a reverse stock split and a large share issuance. The reverse stock split is a bit of a band-aid to meet listing requirements, and it doesn't fix the underlying reason the stock price might be low. The big share issuance, particularly tied to convertible notes and preferred stock, is a major concern. It means significant dilution for existing shareholders, and as the ownership table hints, some of these investors could gain substantial voting power. The company acknowledges in Proposal 7 that these issuances could lead to a significant reduction in the percentage interests of our current stockholders in voting power, any liquidation value, our book and market value, and any future earnings. That is a pretty stark warning. While the company needs capital and wants to avoid cash outflows by issuing stock, it comes at a cost to current shareholders. The proposal to classify the board is also something to watch. While it aims for stability, it can reduce shareholder influence over board composition in the short term. In my view, XWELL is fighting for survival and trying to navigate some tough financial waters. The reverse stock split and large share issuance are necessary measures to avoid delisting and manage debt, but they come with significant risks for existing shareholders, including dilution and potential shifts in control. The long-term success really hinges on their ability to improve core business performance, not just play financial games with stock structure. What do you think about these proposals? Are you comfortable with the board's strategy, or do you see major red flags? Let us know your thoughts in the comments below if you found this deep dive useful. Please hit that like button and subscribe for more corporate breakdowns. You can also join our Discord community in the description for even more discussions. Thanks for watching, and until next time.